Bastion Market Daily Live Forex Market Outlook by Trader Plato. Introduction. The purpose of the market outlook is for us all to have an elite mastery of the Forex market to an advanced level. The Forex market is a decentralized market that runs 24/7 from Mondays to Fridays. It has a market capitalization of approximately $8 trillion daily. Dominant and non-dominant market participants. At the top and in the middle of the hierarchy, we have the dominant market participants. That is the central banks and the large financial institutions. At the bottom, we have the non-dominant market participants. Those are the retail traders. In a nutshell, the dominant market participants make up of 95% of the market participants, while the remaining 5% are the non-dominant market participants. Those are the retail traders. This is according to research and data from the Bank of International Settlement, the Bank for Central Banks. Market mechanics. Market mechanics is a unique hybrid trading strategy that utilizes technical and fundamental constants to generate accurate trading signals. Power of 3, AMD chronological order. On Fridays, we have the accumulation phase. On Mondays, we have the manipulation phase. On Tuesdays, Wednesdays, and Thursdays, we have the distribution phase. Therefore, we do not trade on Fridays and Mondays, as these are the accumulation and manipulation phase of the market. Power of 3, AMD chronological order. The Asian session is the accumulation phase, the London session is the manipulation phase, and the New York session is the distribution phase. So we do not trade the Asian session, as this is the accumulation phase, but we are allowed to trade the London session since it sometimes overlaps with the New York session. Power of 3, candlestick pattern order. Unique candlestick reveal mass psychology that symbolizes the power of 3, the accumulation, manipulation, and distribution. Below are the images of the candlestick showcasing the mass psychology and movement of the market. We have the bullish and the bearish candlestick patterns. Liquidity and trap zones. All the market concerns about is liquidity and nothing else. Liquidity is basically points in the chart where majority of orders are pending to be filled. Thus, liquidity is the energy of the market. Without liquidity, the market will not move. These zones are as follows: yearly high and low, monthly high and low, weekly high and low, daily high and low, swing high and low. Welcome to the chart. There is enough money in the world to go round, and the forex market is a true testament to this. To begin with, let us focus on this black cursor, as this will serve as the hands of our tutor while we are learning. Let us take a minute to explain candlestick patterns. As we can see, price consolidating around this area with a cluster of these white candles. These white candles signify selling pressure. On the other hand, as you can see, price moving up, creating series of lower highs and higher highs. This cluster of green candles, they signify buying pressure. Meanwhile, a candle that is neither green nor white, like this candle, it signifies indecision in the market. Now, let us get straight to our technical analysis. There is no perfect analysis in forex trading, as all analyses are nothing but a perspective of the operator analyzing the charts in relation to the fundamental or technical instruments used in analyzing the chart. So now, as you all know, in the market mechanics, we engage fundamental and technical analysis, and today is a Friday. So in accordance with our fundamental analysis, it is a no trade day. However, if you must trade, trade with caution. So now, the technical analysis is our counter trend liquidity concept. Now, as we all know, in the market mechanics, we look out for liquidity and trap zones. Why do we look out for liquidity and trap zones? Liquidity zones offer the best opportunities in price to either buy or sell, and these are zones that have the majority of orders are waiting to be filled by the market. So the market drives to this zone, fills this order, and moves in the intended direction or the opposing direction. So now let us get straight to it. We need to keep a concept in mind that the market buys to sell and sells to buy. The market does this because the market moves in equilibrium and harmony with liquidity. Now on Euro USD, as you can see these two candles that are shown clearly in this box, these two candles are the Asian session, or you can call them the Asian range. Now we can see that the first half of the Asian session, the buyers attempt to take control. However, they failed to break the high of yesterday. And the second half of the Asian session, you can see the buyers pushing price up more and breaking above the first half of the Asian session. So by the close of the Asian session, we can see the buyers attempting to push price up. So following from this, price is near the high of the day. So in accordance to the AMD, this candle is the accumulation. Then we expect a manipulation candle that takes out this high, inducing more buyers, then selling down to break the structure further down. So now we can see the accumulation, then we expect the manipulation in the inside and the distribution. So by the opening of the London session, we anticipate a sell candle that breaks this high, then push price lower to break the structure. Then we can decide that the euro will weaken against the US dollar. However, fundamentally today is a no trade day. On USD CNH, as you can see that price on the open of the first half of the Asian session, the sellers attempt to take control. However, they break the low of yesterday and they push price further down. And the second half of the Asian session, you can see the sellers pushing price further down more. Now we can see that this is an impulsive move from the sellers, attempting to break price as low as they could. Now, by the open of the London session, we look forward to buyers taking control, manipulating more sellers, then breaking the structure up. Nevertheless, this is an impulsive move. However, in the forex market, anything can happen. On USD card, now the liquidity concept, it gives us the opportunity to leave no stone unturned, and this is one of the best trading strategies, the best analysis tool a trader could have in his arsenal, as you are going to view the market from the perspective of the seller and the buyer alike, looking at the liquidity and trap zones. Now on USD card, at the first half of the opening of the Asian session, we can see sellers attempting to take control. Nevertheless, they failed to break the low of yesterday, and the second half of the Asian session, we can see buyers pushing price up, playing out a classic AMD pattern. So now we expect a further break of structure to the upside to confirm that the USD card is going to buy further up. So price will come and fill this liquidity void and for price to push higher. On gold, the first half of the opening of the Asian session, we can see sellers attempting to take control. However, they consolidate and fail to break the low of yesterday. And the second half of the Asian session, we can see sellers pushing price further down. Nevertheless, they still fail to break the low of yesterday. So following from this, we expect a sell to buy. So we expect a manipulation of sellers to the downside and for the buyers to take control and push price up. Mind you, this liquidity candle must not be more than 2. However, there could be 3, but 1 or 2 candles are solid patterns that confirm the trend to the intended direction. On silver, the first half of the opening of the Asian session, we can see the buyers attempting to push price up. However, they fail but consolidate slightly. Then the sellers take charge and dominate the market to break price further down, breaking the low of yesterday. Following from this, we expect a sell to buy. We expect an accumulation of sellers to the downside, breaking the low of the day, accumulating more contracts to the sell side, then distributing to the upside. So this is an accumulation. We expect a manipulation further down, then a distribution to the upside to break structure further up, and for price to come up here to fill out this liquidity void, and for silver to push further higher. On GJ, as you can see, the first half of the opening of the Asian session, you can see buyers attempting to take control. However, the sellers push price down, and the second half of the Asian session, you can see sellers pushing price further down and creating a classic AMD pattern and breaking the structure to the lower side. So now, depending on your entry, you can enter on this fair value gap or look for another block on a smaller time frame to take out your entry if the other block confirms the strength of this AMD that plays out. So now on GJ, you can expect for price to accumulate and push down. However, since today is a day of accumulation, you can expect this high to be broken and for price to push further up, since this is not a day of distribution. So every technical that plays out is nothing but a trap. Now on DXY, the first half of the opening of the Asian session, you can see sellers attempting to dominate the market. However, they failed to break the low of yesterday. And the second half of the Asian session, you can see sellers pushing price further down. So following from this, we can expect a sell to buy. Since this is an accumulation, then we expect a manipulation to the downside, trapping more sellers, then a distribution to the upside. On GJ, we can see a classic AMD playing out, but since today is a day of accumulation, we can expect this high to be broken for a manipulation, either for price to drive further up, fill out this void, and break the high of the week. On BTC USD, the first half of the opening of the Asian session, you can see the buyers attempting to push price up. However, they failed to break the high of yesterday, and we can see sellers attempting to take control. Nevertheless, they accumulate within the range of the first half of the opening, and they fail to break higher than the high of the day. Following from this, we can see that we are expecting a sell to buy. So we expect the buyers to manipulate more sellers to the downside, then push price up if the liquidity counter trend pattern is to play out. On NZD USD, the first half of the opening of the Asian session, we can see an indecision candle. Then the second half, we can see an impulsive sell candle that pushes price down as price attempts to fill this liquidity void and create a balance of buyers and sellers alike. Following from this is not much of a pattern from insight. However, in the market, anything can happen. So we expect a manipulation of sellers further down and for a buy candle to break up and grab liquidity further up. So plan your trade your plan, and most importantly, manage your risk and emotions. Have a peaceful day ahead.